Good evening, everyone. Hello, guys. How are you doing today? Hello, Olga, and of course, everyone else, guys. I just noticed that the invitation went out to the Telegram channel, so I would like to welcome you to another weekly market watch, key insighted predictions here at Elevating Forex. And hello, David. And David said hello to everyone. Zoom user said good evening. So, where are you guys watching us from? Let me know which country are you based in. That will be interesting. I see a lot of people that are joining, still joining. Can you please let me know who is for first time on these webinars? Paul, hi from the UK. Vicky from India, nice. iPhone user said, guys, by the way, if you, I enable the option so you can rename your name in case you want to use your name instead of Zoom user or iPhone 123 and so on. So let me read some comments here. iPhone 2 from England, Frederick from Norway, Paul from the UK, Vicky from India, Ben's Northern Ireland, nice. Nick Campy said hello. Somebody said first time, iPhone 2. Frederick, first time. David Riyard from Germany. Nemant, like always, from the country of Novak Djokovic, Serbia. Nice. Can be from Sweden. Marcel, first time. Nice. Paul, first time. Frederick, you are a legend. Come on. You guys are legends that you are joining our webinar. Excellent. Vicky, second class. Somebody from Nigeria, Sally from UK, Darish from the United Arab Emirates, Nguyen from Spain, Olga from Turkey, watching you every Sunday evening. Oh, thank you so much. Vicky from India. Oh my God, Lara from Austria. Ramendra, good evening. Riyadh said, how are you? I'm very well, thank you. Ramendra from India. Femi from South Africa. Anna from UK, first time here. From Scotland. Kyle. Jane said, hi, Theo. Jane here from Birmingham, UK. Wow, it's so great to see so many attendees on our webinar. To be honest, I really um, I'm excited actually. Okay. Stelios, hi Theo, thank you. Stelios, you must be Greek. Yeah. Greek or Cypriot or Greek Cypriot or just Greek or just Cypriot. Well, yeah. Okay. So let's start. Let's start, everyone, with our introduction first. And just to make sure that everyone acknowledge this content and this information, it's for education purposes only, and there is no intention to provide personal, financial, or any kind of advice. Okay, so for those who are for first time here, allow me to introduce myself and why I'm on the webinar today. So my name is Theo, my surname is Theodoro, very Greek thing, yeah. So my expertise or my experience in trading, if you like, first I trade for the last 12 years. That's a 12th year actually. I'm also a certified financial technical analyst. I hold certifications from the Society of Technical Analysis in the UK, and also I own certification from the International Federation of Technical Analysis as a certified market technician, and both them with distinction award, which means that I know something here. Yeah. Actually, I love this job, guys. I love trading. I love everything that comes with trading, and it's my passion. So I wanted to go a step further to enhance the knowledge, so I can be able to transfer more information to everyone that attends the webinars that I host. So I specialized in currency trading, or in CFDs if you prefer, and in currency correlation. I believe it's the most important aspect of any trader that seeks profitability in currency trading. Okay, it's not just about technical analysis. If you understand technical analysis and also you have some fundamental knowledge about how the currencies they associate with each other, like last week actually was one of the best week, and I'm sure those who were on this webinar last week and they had some time to look the charts, they should have made some significant returns, because the markets were absolutely predictable. On a daily basis, besides my trading activity, I also deliver market analysis for some hedge funds and for some prop firms. I create educational courses for trading and investing. I publish some articles in reputable financial magazines, and I've done some events with Steve Ninson, the gentleman who wrote Beyond Candlesticks. Every time I read the name, I just look on the right, because I have his book there on my bookshelf, just to remember the name. That's why you will see me all the time. I do like this. It's very obvious. And also some webinars with John Bollinger. All of them are on the YouTube. Okay, you can find them. The guy who invented the Bollinger Bands. Daniela Kale, if you are from Spain or from Europe, it might rings the bell. And anyway, so let's go straight to the charts. Guys, before we continue, let me know if everyone can see the charts. Just let me know if you can see the euro against the Australian dollar here. Yes, yes, perfect. Okay, now remember, if you need to ask anything, feel free. Use the meeting chat to write any questions you may have about the markets and all this stuff. So, and just to clarify something before we continue, the purpose of this, I can do analysis on any time frame you want. I can do on a 5-minute chart and try to impress you with knowledge and all this stuff. I can do it on the 1-minute chart. That's not a problem. I can use complex indicators and complex stuff to just create confusion. Markets are already confused. What is the number one goal of each trader? Is to be profitable in trading. Okay, so the analysis I conduct here every Sunday night, it's to help someone has no idea about trading and someone has a great understanding of the market to be able to trade nicely, okay, and most of the times profitably. So without guaranteeing any profit or losses occur to your account. So I use the weekly charts to predict based on price action and if market direction is clear, and then I use the 4-hour charts for execution and for entries. Why I do that and not any other time frame? Because it's the only time frames they can be relevant for the whole week. If you leave this webinar and you get the information from here, next week you will be able to apply them on Monday, on Tuesday, Wednesday, Thursday, and Friday. Okay, if I just do the analysis on the 15-minute chart or 1-hour time frame, then the information, let's say on Wednesday, won't be relevant. So it's like you're gonna sitting on the side and wondering, okay, what am I doing now here? For this reason, just trust the process, trust what we say here. I'm a living proving of what I deliver at these webinars. That's how I trade personally as well. I'm not doing something different when I'm off the Zoom. I do the same thing. I use the same plan. I do the same analysis, and everything I just share it with you here openly. So last week, the euro against the US dollar was a kind of moving downwards, and on Friday, it just took a push to the upside. Why that happened? Because the US, in the Feds in the US, they kept interest rates unchanged, and on Friday, the non-farm payroll number dropped, whereas in the Eurozone, the CPI, the Consumer Price Index, increased. So on Friday, and I told you that on the previous webinar, that on Fridays, the market, they will wait the non-farm payroll report to reveal the whole week's move. Okay, and that's what happened. That's what happens actually. That's how the market works. So on the 4-hour time frame, there were some good entries here, to be honest. But the most important thing is what is happening now. Right now, the price sitting at this resistance. For traders, they trade like, for those they want to do martingale or this kind of stuff, there is an empty space, let's say here. Where do we expect the price to come around this level to find some support and to push to the upside? So traders, they want to follow the trend. They're going to wait for the price to come around this area here, around 1.08500, and to find support and to push to the upside. By the way, I'm going to also show most of the trades that they were applicable based on the previous week's webinar, so you can get an idea. Okay, but I'm going to just explain them while we are reveal also the markets for that for the next week. Cool. Now, so that's what we expect to happen on the euro if this new uptrend will continue, because the market was making lower highs and lower lows. There is a trend line can be drawn here, or market structure, same things. Price make a new high, we wait. You can use Fibonacci retracements. This is the Fibonacci tool from the low to the high, and you find the percentage of retracement, which I always, as you know, I like to have the 0.5 and 0.61% in a box, and I want to match it with a static support in the market. Friendly Fred asked, just wondering, are you Gios on Telegram? No, I'm not Gios. Gios, it's another person. I'm Theo Theodorou. On my name in real life and my name on Telegram, I mean, it's Theo Theodorou. But I'm not Gios. Does the fair value gap at the end of the chart mean anything or not? Of course it means. It means that it was a significant imbalance between the buy and sell orders in the market. And usually the price will try to get some of these areas filled, mitigated. So I like to go on the most predictable ones, which Fibonacci retracement 50 to 61.8 and this inside resistance are a good cluster on this one. Yeah, and Amand said very well. I talked about some ebook content that I'm writing to share. I haven't shared anything with anyone. Some people, they already asked. Thanks for asking that. So I didn't share anything with anyone yet because I want to sort out some things first and then to go through with that one. Okay, so apologize apologize for any inconvenience. Okay, but instead of tell you that again, this and that, I'm just very straightforward, like I haven't shared it yet, and give me some time and I will do that. So Vicky said, I ordered sell at 1.09. Should I hold or close at loss? I cannot tell you what to do in your personal account. I'm just telling you what I see as experienced trader here, an analyst, and what I will do. I will wait for the price to come here before I will buy. Okay, but to tell you close your positions or not, I think it's this is the euro against the US dollar. Better if I put you the watermark at the back. Yep. Much easier now. Yep. So let's continue with the Great British Pound against the US dollar. So the Bank of England last week decreases or dropped the interest rate from 5.5% to 5.25%. Automatically the sterling weakened. So the price on this one here, the price continue making lower highs and lower lows. Now, there is a trend line here, and there is also a bearish pin bar. That's the 4-hour time frame. how I will be looking to trade this, because there is obvious some weakness on the US dollar and we don't know what really is going to happen. If the price will push to the upside and it will break above this trend line and it's going to make a higher high here, then I will be waiting for the pullback to go long and target this level here. But if the price, I will not go short right here. Short means to sell the market. Long means to buy the market. I will not rush to sell the market here. And yeah, because I don't like this kind of deep retracement up there. So I will be waiting. If the price will break below, if the price continue lowering and penetrate this low point here, the previous week's low, it means it can continue to move lower. Okay. But this one, it's a little bit more weird in my opinion. Now, very interesting, it's going to be the Australian dollar in general, Australian dollar, because next week, the Reserve Bank of Australia will announce interest rates on Tuesday, actually. And if they're going to drop, if they're going to keep them the same, or if they're going to drop them, Aaron, yes, correct. Tyler said, where do you find these news? Very good analysis. It's my job to reason the markets. I read different newspapers, online newspapers, every single weekend to understand what's going on with the fundamentals. And then I put them into the technical chart and I try to find the most probable and the best, let's say, currency pairs that they are about to move next week. Forex Factory is usually good, but I'm not sure if you use that. I checked also Forex Factory. I checked Market Watch. I checked the FX Street. I checked many of them. I have about 4 or 5 that I checked every single week. So what I want to see here is the price to break either above the resistance or below the support. So if the price breaks above the resistance, I will be patient and wait for a pullback. I will find the price action that I teach you in all webinars, which is the bullish engulfing or the long lower wick. You can call it hammer, you can call it doji bar, whatever. But these are the 2 price actions that I personally use to execute my trades. If the price, it will break below this one here and it's going to move lower, I will wait for the green bars to appear and to go short from there. It means to sell. But within this range here, I'm not going to do anything because ranges and this sideways market are not off. They do not offer high probability trades most of the times. I have just started. Aaron said, I'm grateful for the chance to make money with you guys. Thank you so much. Kay asked, do technical analysis always follows the fundamental news? No, absolutely not. They don't. But when both of them, they converge, it's amazing. Like we explained last week, actually, and we're going to explain this week as well. So this is for the Australian dollar, US dollar. Let's continue with the US dollar Swissy. So this is the better to watch this one. The price on the US dollar Swissy continue its downwards move. The Swiss franc used as a safe haven, let's say, currency asset. Investors, traders, they believe that the National Bank of Switzerland or the Swiss franc, it's more stable, let's say. So they tend in volatile political and geopolitical events, they do tend, investors and traders, they do tend to exchange their currency to Swiss franc. And that's why now with what's going on in the Middle East, the Swiss franc is performing really well, and yeah, traders they prefer it. Paul asks, hi Theo, will there be any trading tonight? No, we don't do trading tonight here. Mohammed asks, will you discuss gold? Of course, gold we will discuss. So US, that's all for USD Swiss. As you can see, the price is in a free fall. Now, before I continue selling or before we start selling, we want to see the green candles to appear at an area, let's say, of resistance somewhere here or even higher. You see, when the price makes such a straight move to the downside without any kind of swing, it's very hard to trade it. Next one. Let's check the Great British, actually the New Zealand US dollar. Something to keep an eye on as well next week. It's going to be the Australian dollar for the reasons we announced, and also the New Zealand. Why? Because in New Zealand, I think it's on Wednesday, they will report the consumer price index for the third quarter. And this is going to indicate the unemployment rate in New Zealand. So the unemployment rate in New Zealand, it's expected to increase almost 0.5%, accurately 0.4%. And if this is going to happen, and if the market will follow through, it means that the Kiwi, it's going to get very weak currency. If the Kiwi or the New Zealand will become very weak currency, we can take advantage of, let's say, Euro New Zealand to go long, or JPY New Zealand, again, to go long. It means we buy the first and we sell the second. But what happened last week on the webinar, we explained that the New Zealand against the US dollar on the weekly chart, it's in a strong demand zone. This area of support. On the 4-hour time frame, though, the price was moving in a downtrend, lower highs and lower lows. And we said, if the price will break above these highs or this trend line, we want to find a way to go long. It means to buy. I had a couple of losing trades here. The first losing trade, it was this one here, the bullish engulfing at this point. And I had one winner, the second one here. It was a winner, 2-1 this one, and -1 here. I made 1%. I risk 1% on any trade. So I made 1% from this one. That's why when I educate people, they want to learn how to trade, or they want to advance their trading, whatever, and I do group education webinars, group education classes on a weekly basis. And these are things that we touch very, very deep. The reward to risk ratio and the high probability setups, because if you have a good reward to risk ratio, and if you stick to that, not just to know the reward to risk ratio, but if you stick to that on any given trade and you don't judge your trades, then at some point you will realize that trading is much more enjoyable than what you might experience so far. Aaron asks, may I ask, when do you start sending signals, as I'm only new? What time in the morning do you start? Thank you. Our traders here at Elevating Forex, they start sending the intraday signals at around the London Open, which it's, let's say, or the European Open, let's say at 7 a.m. or 8 a.m. UK time. Nemant asks, does anyone from Elevating FX consider to open some Discord server for community purposes? I will pass it on to Giles, or you can send a message to support and Giles will let you know. I don't know about this stuff, guys. Temitayo asks, I find the Australian dollar tricky. Made losses on this currency in past few weeks. Were you buying or selling that one? Kylie asks, do you trade cryptocurrency? Because there has been a massive dip in all cryptocurrencies recently. Yes, cryptocurrency, of course, I trade cryptocurrencies, but I mainly invest in cryptocurrencies, to be honest. And yeah, the massive drop, it's going to occur because if you see the monthly charts, the long-term view, you will see that it's just in a steep uptrend, and the monthly chart also, it needs to take some rest. So it's going to retrace, but the monthly retracement, it looks like a depression on the lower time frames. Okay. Aaron, would you mind, because all these questions are a little bit, they are great questions, but not relevant with this webinar's technical analysis. You can send me also a message on Telegram, or if you guys want to ask me anything about your trading on, you can either send it to support@Gios, and Gios will forward it to me, or you can just send it directly to my Telegram. Find me on Telegram, that's easy. I think the name, it's just Theo Theodorou, like what you see here. Yeah, I think so. I didn't change it. But I will try to make sure that is correct. If I find it, how I'm going to do that. Because, yeah, I don't know. So, let's continue. Just give me 1 second to make sure we didn't leave any questions behind. So just in case you want to send direct message, you can find me on Telegram there. So yeah, I will keep an eye on the weakness of the New Zealand dollar, to be honest, but not against the US dollar primarily. I will prefer against maybe Japanese yen, because Japanese yen, it's a little bit more it's stronger actually. Next one, let's check the Great British Pound against the Japanese yen. So few trades were able to be taken based on that the Bank of England dropped interest rates, and also it was some strength from the last couple of weeks on the Japanese yen, and also the Bank of Japan increased their interest rates. So couple of trades here, then one it was 2%, the other also it was 2%. It is at 2%, it's still running, hasn't hit the take profit or the stop loss yet. Okay, but I will just share something very very quickly with you. Whenever I'm in this type of trades, and my trades, they're going to take, let's say, anywhere between 1/2 day or a couple of days, no matter what's going to happen, if the price moves, let's say, more than 1.5% towards the profit area, I will drag the stop loss to the break even, just to make sure I'm not going to get caught on any bad situation, which many times it occurs. Okay, so there were a couple of good trades in this one here. The weakness, if it looks like the market just moving lower, if the weakness will continue on this one, we're going to look to go short. It means to sell. But remember something, and please remember that from me all the time. Whenever you intend to sell, wait for green candles to appear. You want to see green candles on your chart before you start selling, before you find the reversal black candle to go short. If the market is on the free fall, and you see all the trades I took, they were preceding a green candle, the reversals. It was green candle and then bearish engulfing reversal, and then I went short. So I will not open a trade here to go short, no matter what, because the price, it's already on the go, already moved. I would like to see some green candles before I sell the market. Okay. Next one, the Euro JPY, same prices on the free fall. We are looking to go short on this one too. Euro, my God, guys, I would like to see some people to tell me, hey Theo, last week I trade this euro pound, or I trade this pound Swiss, or whatever we say this week, and yeah, I will be very happy. So what happened with this one? For those that were on the webinar last Sunday, we said the price on the weekly chart, yes, it's in a downtrend, but observing a little bit, paying attention to this last downward move, the price showed that after it made a new low on the weekly chart, it didn't push through and it didn't maintain the lower low, and it just snapped back with a bullish candle. So this is an early warning of market weakness. All right, and going down, so we said if the price, we were somewhere here, the price, we said it broke above this downward trend line. There is a trend lines are a great tool to understand the validity of the trend, not to trade the trend line. Many traders, they wrongly understand that, hey, if I use a trend line, I need to trade it. No, we don't. I don't trade trend lines, but I use trend lines to validate the trend direction. So the price broke above the trend line and also create a new high. So it changed the market structure. And we said, and I marked it here, that was from the previous week's webinar, if the price come right into this level because of the analysis we did, and we're going to find reversal price action like bullish engulfing or long bearish, long bullish candles here, we're going to take the trade. And on this one here, again, I had two good trades and one, let's say, bad trade, low losing trade. So the first losing trade, it was this one here, where the first winning trade was this one here, the first losing trade was this one here, and the second winning, it was this one down there. So, but I'm not going to talk about the winners, I'm going to talk about the losing trades, because losing trades are where you learn from. So the price printed a bullish engulfing here, and I entered here, and I target this area up there because that was a recent high. We didn't know that the market is going to move that much, okay? But the price just with this bearish candle took my stop loss, okay? And this one here, obviously, it went through, and this one here was the other very tempting, but I wasn't around, so I didn't take this trade. But yeah, this one here also, it was a good winner, and it hit the take profit area. So they were good. When I take profits on my trades, most of the times they go for 2 to 1, and when I take losses, I lose -1. Okay. Except when I trade prop firm accounts where they have some commissions and some swaps, I try to go for more than 2 to 1, let's say 2.2, just to cover the losses on the losing trades. Kyle asks, do you ever trade with liquidity and fair value gap to find a position? Look, I use all this stuff, guys, and I have some webinars on YouTube I did for some prop firms about fair value gaps and about liquidity, buy-sell side liquidity, order blocks, everything. But to trade purely this stuff, it's, let's say, it's not how the market really moves. This one, we use them to validate setups. We want to trade momentum. We want to trade when there is move on the go, and the momentum is going to come only from trend trading and only from price action, from nothing else. I trade for 12 years, and I bet every single trader to come in front with their trading activity and to ensure that at the end they trade purely on these liquidity and fair value gaps, and that's all what they do. This for validation, okay? Vicky asks, easy strategy. Easy strategy is this one here. You look on the weekly chart and then you go on the 4-hour and you execute. Or if you have time to look the charts throughout the day, you look on the 4-hour charts and you execute on the 15-minute chart. Like you want to trade the trends, price makes higher high, wait for the retracement on the Fibonacci level at the level of static support, find a bullish engulfing or a bullish hammer and take the trade. Entry at the close of the engulfing or the hammer, stop loss below the low of the engulfing of the hammer, and target, let's say 2-to-1 or 3-to-1. This is the strategy I teach here. This is the strategy I trade. Olga asks, Euro Japanese yen, it's gonna be the same picture this week. Oh, nobody knows that. Vaughn asks, can you show gold? What's your opinion? Where would it go right after it opens tonight? Okay, let's have a look at the gold soon. Next one, pound Swissy. It was another very prominent currency pair as per our analysis last week, and we had it here on the charts because we said that the Swissy, it was strong. If the Bank of England will drop the interest rate, we will definitely look for short positions. And there were a couple of short positions. The one it was on Tuesday, and the other one it was the day after. That's Tuesday, wasn't it? Yeah, Tuesday. And the other was on Wednesday. Okay, from here I was trading up to this point here. Okay, and the exact same thing I said last week. I didn't say anything different. So we keep looking for short positions, but what's going to happen this week? Most of the currency pairs, they're going to do retracements, and if we are trading the trends, then it's going to be a little bit of, yeah, we're going to find it a little, we have to be a little bit more careful actually. Euro Canadian dollar, I had two positions here again based on the analysis we did last week. So the price made higher highs, higher lows on the weekly chart. There is an upturn on the weekly chart, and there is a resistance here on the weekly chart. The price was down there last week, and we said that the price can move all the way up here. After it hits this resistance, we don't know what's going to happen. So the room for our opportunity, as I like to call it, it was from here to there, from point A to point B. What we could do on the 4-hour chart, we said, let's wait for the price to come at an area of support or to break a trend line, and we take the next trade. So I was a bit aggressive, to be honest. I had two trades here, both of them with bullish engulfing candles. As you see, I took this bullish engulfing here, entry at the close of the bullish engulfing, stop loss below the low of the bullish engulfing, and I target the resistance just a little bit below. And the second one, after the price breaks outside of this downward trend line, bullish engulfing here, entry at the close, stop loss below the low, and target at the same area. Okay, simple stuff, simple strategy. That's the only thing I trade. That's the only thing I teach. I can do it on the 1-minute chart. I can do it on the weekly chart. Doesn't matter. Wherever you want to do it, in whatever chart you want to do it, you can do it. If you're going to trade any time frame based on this strategy lower than the hourly chart or the 4-hour chart, you need also to have some more understanding, which is we need to add a few more parameters. Okay, and also it's something that I teach when I do group educational workshops about trading from A to Z. Next one, Euro against the New Zealand. I will be definitely looking for this one next week because the price, we will see if the New Zealand get weakened. We're going to have a nice breakout here. If not, we're going to see drop until these levels here. So it can go both ways, but let's hope it's going to be more bullish. Euro Australian dollar. Australian dollar was very weak, and we expect it to keep moving upwards, this currency pair. On the 4-hour chart, what I want to see is the price to make some kind of retracement, come somewhere here to print a bullish engulfing or a bullish hammer price action to go long. Also keep that on your chart. The previous week was, oh my God, do you remember the Australian dollar New Zealand? We explained that on the weekly chart, the price was at resistance with a reversal price action. The best trading opportunities are when the weekly chart is at resistance or support and there is a reversal price action right on the weekly chart. Next week, 99% of the times you will see you will see evidence that the price, let's say, it created an opposite trend to take advantage of that. And this one here, we said that if we're going to find some traders, maybe they're going to find some bullish and bearish engulfing right into this area. We marked it. Some other traders, they enter short right at this area with stop losses right there. Some other traders want the break of this one or the break of that one to go short. I was convinced after the break of this one and took some trades around here, to be honest. Okay, obviously because of this kind of consolidation here, the market during the London and New York trading session, it didn't go anywhere at this point. So if the price doesn't move, let's say, upwards for a retracement during the New York session and the London trading session, most likely it's going to drop. Okay, another, it was just 2-1, but very good trade, very predictable. And yeah, that's all what we want to trade. Let's check the gold because we are about to finish for tonight. I didn't see any currency pair that you asked except the gold. Olga said pound, JPY, I mean, yep. So gold analysis, what's going on the gold? So this is the analysis I will send tomorrow on a prop firm actually. So I will just present it to you. You are lucky you're going to see it here. So the price on the weekly chart makes higher highs. Last week, it almost hit it, the all-time high, almost at this all-time high. On the 4-hour time frame, although we were looking for short positions, the price broke above this downward trend line and it created this bullish engulfing here. It created another bullish engulfing there. So that were a little bit, interesting trading setups. What we expect this week though is that because on the 4-hour time frame and the weekly chart are both in alignment, they are both in an uptrend. Okay, yes, it was a massive sell-off on the stock market, it was a massive sell-off on the cryptocurrencies last Friday. The things, they get a bit hot politically and geopolitically in the Middle East. It attracts all the worries and attention from all investors around the world. And when there are in times of these uncertainties in the world, all traders, all investors, they are looking to move their money from the stock market to save let's say assets. Like they prefer to buy government bonds, they prefer to buy gold, they prefer to buy silver, they prefer to at some point when things I remember back in 2020, I used to be in Australia, I used to live in Melbourne, and the COVID was started in Europe, and I was sure that, hey, this is going to cause a lot of trouble. The stock market, it's going to go for a retracement. So I've decided that I will buy some silver. And yeah, I bought also physical silver back then. And after a few months, the price just exploded and I went and I sold them. So I also trade them on the CFDs, like on the screen, but I also traded them physically. So that's what investors, they do in times like the one we live now, like the one in Middle East. So what we expect here, they are actually, what we see is that the price, it's in an uptrend. you don't focus only on one candlestick. You focus on the big picture, and then and on the trend. Traders, they make a mistake and they focus on what happens right now instead of what is happening generally in this last upward move. What do we see on the chart is that the price makes higher highs and higher lows. Now, the way it's going to come, I will ask you this. How is possible you are trading a trend, and you said, okay, if the price comes at this area of support, I will buy, or if the price tapped into this order block, I will buy. But when you see the way the price moved downward into this area of your interest, you are skeptical to buy. Do you guys see the mindset? That's very important. This kind of mindset, this kind of thinking, it's important in trading. So I see an uptrend. I'm waiting to buy where I want to buy. I will buy if the price comes at somewhere around this. Okay, it tapped into this area, but for next week, if it's going to move lower and it's going to enter this order block, I will be waiting for a reversal price action. If the reversal price action, like a bullish engulfing or a bullish hammer occur, then I will validate the entry and I will most likely take the trade with stop loss. But excuse me, if the price drop and just move lower, then I will see, okay, price change, price change trend. So we're going to be looking to go short. If the uptrend ended, then we're going to go in a downtrend. Fred asks, do you think we are going to a new highs? Yeah, why not? If it doesn't go above a certain price, won't there be a correction? I don't really understand what you mean. If it doesn't go above a certain price, which price? 1 week chart on gold look the same like now. What do you think? Yeah, the gold weekly chart is up, 4-hour chart is up, uptrend. So yeah, I like that. Although we don't have time, Vinci, but why not? I can do the Nasdaq and the US 100. That's okay. I don't have any problems with that. Let's start with the Nasdaq weekly chart. It's in an uptrend. Traders, guys, boys, girls, gentlemen, everyone. The market makes higher highs and higher lows. This is an uptrend. Now, we don't trade the weekly chart, but we use it as a direction bias. So currently the price moves downward, but we have to understand that it's in the content of the uptrend, the weekly uptrend. Now, if the price moves lower, then definitely we're going to continue selling this. But where we can enter, if the price comes a little bit here, we can find for short position. But if this is going to be a false lower low and the price will shoot above this one, then definitely we're going to resume the weekly uptrend and we're going to look for long. Right now, the price is sitting at its support and it's not the ideal way to continue shorting, to continue selling this one. Okay. And the last one for tonight, the US 30, same thing. Price makes lower highs and lower lows. Here is my trading plan. If the price moves upwards like this, bam, 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 enter into this fair value price. There is an inside resistance here. I have some moving averages with bearish crossovers like this. I will be looking definitely to go short. But if I'm going to buy right here, no, I'm not going to buy. I don't like to buy with just to go and fill up these areas here. So it's not part of my trading profitability plan. Okay, so guys, I think that's all from me tonight. Thank you so much for tuning in. Again, if you need anything or if I have something to share, I can share it here on the Telegrams or next Sunday. Myself, if you have any questions, please message support@Giors and Giors will send the message over to me. Or if you want to send something directly, here it's the you can use this one to send me. Either way, same thing, doesn't matter. So I hope you're gonna you find it very informative. You have something to trade if you are looking to trade, to learn how to trade yourself as well. And beside the signals our traders they send on a daily basis on the channel. So myself, the whole Elevating Forex team, like to wish you to have a fantastic rest of the evening wherever you are in the world. Happy trading next week, and I will see you all next Sunday at the same time. Thank you. Bye, everyone.